Hi there traders, this is Steve Miley for FX Explained in the Forex Zone, where we're going to take a look at activity for the major FX currency pairs in here during what's been a very turbulent week again across global asset classes, global financial markets in here, with ongoing concerns around the trade war tensions that we have currently in the market between the US and China, and also concerns about recessionary fears being spiked in here by the fact that yield curves in the US and in the UK have inverted. Let's take a look at the FX pairs though in here. Euro dollar in here suffering lower in here during this risk off phase that we've seen more recently. European government bonds surging higher in here as a safe haven, and seen the euro weaken in here as those government bonds go to higher prices and lower yields. So a sell-off in the euro versus the dollar, and really aiming out this critical 110.69 level. 110.90 the short-term target, but real risks for a challenge to 110.69, and through there would signal a more bearish theme. If we look at the pound versus the dollar in here now, cable, a sideways consolidation. Since last Friday, we had that big sell-off in cable on the back of a very negative Q2 GDP report in here. That breakout, since then the market been consolidating. We got a little spike higher and then failure back from 121.51 yesterday. And that for me still leaves a negative bias, but not really too much to do in here. The market very sideways all week. For the US dollar versus the Canadian dollar, the US dollar strengthening here for much of this week. Again, on the back of the US Sino trade war concerns in here. Trade war negative for Canada, negative for oil, so negative for the Canadian dollar in here. Seeing the US dollar outpacing the Canadian dollar, pushing higher, and real risk up to this recent peak in here from earlier in August at 133.45, and potentially through there going into the day Friday. Let's take a look at the Antipodean Australian New Zealand currencies in here. Australian dollar choppy and sideways really throughout this week. But whilst capped by this downtrend line and these barriers, we see these two failures here, 68.17 and 68.22. A lower low in here, 68.17 below 22. And you got the downtrend line. Whilst below particularly these barriers in here, we're looking for a roll back down lower going into today. On the downside, the critical level 67.07. If we look at the Kiwi dollar in here now, drifting lower in here, again the same trend line in here, the market unable to overcome that trend line, just kind of prodding at that trend line in here right now, but unable to really forcefully break above that trend line. And whilst below 64.71 today, we see risk down to the recent lows here at 64.17. And finally, we're going to finish off with dollar yen in here. Risk off environment from the beginning of August. Big sell-off. We did get a rebound during the choppy consolidation earlier this week, but then the market drifting back lower. And we still see a negative bias from this early August sell-off, and from the fact that we got that impulsive rebound, that we've given up a lot of that impulsive rebound from earlier in the week. And then that leaves negative pressures into the day. 105.60 and 105.02 downside targets. Only looks more positive above 106.78. This has been Steve Miley in the Forex Zone, and I'm going to wish you a great trading day. So traders, don't forget to catch us again on the Forex Zone, and also check out all the great content on fxexplained.co.uk.